right, guys, welcome back. We are here with Sean Tepper, founder and CEO of Ticker.com. Sean, how are you doing today?
Austin, thanks for the invite. Appreciate it.
All right, let's start off with Ticker. What is Ticker? That's it. That's the question. What is
So Ticker is a platform that helps people manage their own investments with confidence. So just, in layman's terms, what does that mean? So there's really two different types of platforms out there for stocks. There's brokers, which is think like a Robinhood or a TD Ameritrade or Fidelity or whatever. That's where you connect your bank account. Now they're great for buying and selling stocks, but they don't show you like, hey, is Tesla a good stock? Or is Apple a good stock? Or is GameStop a good stock? We solve that problem. And about 80% of our audience they're completely new to the market and they come to us so they know, and we're screening stocks for them. We got over 40,000 stocks on the platform. And then we teach them everything along the way. In fact, we just launched the iOS and Android app. We've got a web app as well that's been live for years, but our iOS and Android app, it's got everything the web app does, plus Duolingo-inspired learning modules. If you ever used Duolingo, I'm just curious, have you before?
I've helped my son who's learning, who goes to Spanish immersion school with it.
Okay.
Yeah, I came up short a little bit when I was trying.
I'm trying to refresh my Spanish as well, but Duolingo is like the best in class with micro learning modules. So we kind of did the same thing with investing learning modules. So that's also on the platform. So I'll stop there.
Okay. So your target market is new to investing, and they want to be, they don't just want to go in and like take their own chances. They want to be educated. They want to learn,
right,
not just about investing, but about what stocks exist. Is that right?
Yeah, they want to know what they're doing because it's never been easier for people to join the market and invest on their own. So for context there are about 400 million retail investors in just 17 countries. So it's easy, not just in the States, but all over the world. People can sign up for a broker, and those brokers are like free or low fee, you could say. So it's easier than ever. So yeah, people are joining, but they have, in most cases, they don't have a strong idea of what they're doing. They're kind of taking risks they shouldn't. So yeah, we solved that problem.
And so how do you structure that education? I mean, how do I go in and read what you have to say about Tesla, for instance, right? Are you looking at historically where it's at? How are you evaluating a stock and then being able to teach your audience about it?
Yeah, I'll give you a quick 30 to 60 second backstory because it'll make more sense for you and your audience. So I've been investing for a little over 15 years, and I started the hard way. I went through a merger of a small business. It was an agency building websites and software for small, mid-sized businesses. That was 2010. And it wasn't like a check was written like, hey, here's $1 million. It was none of that. It was service businesses don't have a large multiple on sales. It's not like 1 or 2x revenue. It's nothing like that. So anyway, we had debts and liabilities wiped clean with the merger. And I said, I'm not going to do that business again. I want to get into investing. I want to make money work for me instead of me working for money, right? So I started getting into private investing, which is investing in private companies, kind of like angel investing. Well, I made some money. I lost some money over 5 years, and I'm like, this is stupid. Like I could be doing this the next 20 years. Let's do things differently. Let's go to Warren Buffett and Charlie Munger and see what they're doing. Well, they're able to consistently beat the market. The question is, how? Because we both know they're not gambling men. They're not using emotions or feelings to pick stocks, right? Which means they're probably starting with some sort of logic. So the majority of my career has been in tech, project management primarily. I did a lot of work with large corporations. So I'm like, let's go at this logically. So I started creating Excel sheets, read as many books as I could, and a lot of fluff out there, I'll tell you that. Went down the YouTube rabbit hole, created an Excel sheet, and as Warren Buffett teaches us, he said if he was managing $10 million or less, he could make 50% per year. And I'm like, okay, so there's the benchmark. And another guy I know out there is Phil Town. You want to aim for 15% or more. So I'm like, all right, we got this range here. Let's see if we can get between 15 and 50% consistently. So I kind of iterated and worked on this Excel sheet for about 4 years. And I made returns between 15 and 50%. In fact, much closer to 50. So it comes to 2019. I start sharing this Excel sheet with a few just regular people like you and I. And everybody's like, hey, you should turn this into a software. And I'm like, bam, got my idea. And to answer your question, finally, what does it do? It has a scoring system from 0 to 100. The higher the score, the safer the investment. And so you know, and your audience knows, our calculations are open source. So we try to just get rid of the black box. There's no like hidden secret formula. You can go read our calculations. And we even tell our customers, you can go create your own version of Ticker if you really wanted to. So people can see, but we look at, because your audience are all business owners, we look at revenue, year-over-year growth. We look at profits, year-over-year. We look at free cash. We also look at debts. You want to have lower debts. And there's a few other variables as well, but they make sense when people see them. So we want to see the numbers growing in the right directions over about 4 or 5 years. And if you can get those numbers right, you're going to get a higher score. And in that case, you got yourself a strong stock to buy.
Nice. And so how has this evolved from an analysis perspective, right?
Mm-hmm.
Because in the beginning, this is your spreadsheet. This is your baby. Is everything in there still you and your spreadsheet, or do you have analysts doing this work for you at this point?
Well, I wrote the algorithm in Excel, and then it was just a matter of converting it into code into our current platform, and now, of course, into the mobile app. So, yeah, there are no human beings that we get rid of. And that's one thing, analysts on Wall Street, I give them credits, I give them respect, but there's an emotional factor, no matter who you're dealing with, whether it's John Doe or, Jane Smith or whoever. We get rid of all that. We just cut right through the noise, right to the math. And that's why Ticker, a lot of people, I'll speak on behalf of our customers here, they use Ticker as the gospel, if you will. You want to find out, like if you hear a stock mentioned by somebody on YouTube or a podcast, or you see something on Twitter, where do you go first? Well, you go to Ticker first to see what is the truth. So that's the objective.
No, that makes a lot of sense. So is there within the educational path, because people have got to be able to make their own choices, it sounds like, right? You tell them the safe from 0 to 100, but is there a path that you can go to that is the Sean Tepper 15 to closer to 50% path, where you have X amount of units, this company, X amount of units, this company? What is that balance between guidance, free will?
Yeah. So with this, that's a really good question. So to step back, where we fall into the picture, we're considered a publication, or we have what's called the publication exclusion. So we're not advisors. We don't go to anybody. We won't go to you, Austin, and be like, hey, based on your age and your risk level and your retirement timeline, you should buy this stock, and that stock. We can't do that. What we can do is analyze stocks evenly across the board. Doesn't matter where they're located in the world. We can look at them exactly the same. And then you, as a retail investor, you get to pick and choose what you want to invest in. It's kind of like going to the restaurant. There's a menu. Like, oh, okay, so and then you'll see those little highlighted boxes like top seller or crowd favorite or whatever. It's like, you're going to find those top stocks in Ticker pretty quick. Now, a service that I will be offering, because we have 3 different pricing plans within. We've got Premium Plus, and Advanced. I'll just be transparent with your audience so they know the pricing. Otherwise, they're going to be thinking about it. But we're a 14-day free trial, no credit card required. After 14 days, it's $15 a month or $99 a year. And then the prices go up from there. But our Premium Plus and Advanced plans, I'm going to be offering weekly trade ideas. It's me. It's what I'm buying every week. And a few customers, it was actually their ideas. Like, Sean, would you be interested in providing the service? I'm like, totally. Let's do this. So it's one of those, like, this, you want to get feedback from your customers. What do they want? So it's just a service my audience came up with, and I'll provide it.
That's awesome. I mean, what a great feedback loop to, to hear people say, like, as much as we want to be guided, maybe we also just want to be told what to do.
Like what am I doing? That's the super, there's the easy button, which is Ticker. That's the super easy button to see like, oh, okay. So I'm going to try to send it out every Wednesday or Thursday. So they can literally just check their phone and be like, okay, so he's buying more of this or selling more of that.
You're going to the whole 10,000 hour theory. And if, a lot of your audience is in their, fifth or sixth hour, it's a lot that, anything they can do to bridge that gap. But, it's also that thing where, it's cool because you've organized it to, teach a man to fish, right?
Yeah.
Here's all the tools you need to become a good fisherman. But there's also like, that sounds good. Also, could you just catch everything for me?
Yeah. I use that analogy all the time. I like to fish, but can you just do all the catching for me? I'd really just have a freezer full of salmon. That'd be great.
So for any of our listeners who are maybe on their first few hours into a 10,000 hour deep dive of all of the great Warren Buffett and Charlie Munger philosophies and strategies, could you kind of sum up a couple general principles that they use that you brought into Ticker?
Yeah. So one of my favorite quotes from Warren Buffett is, there's some perverse human characteristic that likes to make easy things difficult. And that couldn't be more true for the stock market. People over-engineer it. And I will say this, you don't have to be the smartest person in the room. You don't have to be an expert in math. You do need to, this is key, to control your emotions. And this is one of those deals. This is a quote, another quote from Warren Buffett is, you want to be greedy when the market is fearful and fearful when the market is greedy. So what does that mean? Well, when the market is going down, which is something we actually want, a guy out there by the name of Phil Town, he teaches us, he says a little different. He's like, when you stockpile, which is when you buy more when the market goes down, you make money when the market goes up, but you get rich when the market goes down. It's the same concept, is you want the market to go down because what you're doing then is you're buying financially strong businesses, because when the market takes off, which it always does, it takes off like a rocket, and your on sale businesses that you're buying when the market is going down, that's where you make a lot of money. So the best concept is really managing your emotions. You can do that, right? You can do very well. Now I may trigger somebody or two out there. If you're somebody who hides behind your computer and gets on Twitter and writes nasty comments, that shows low emotional intelligence. Like, investing in the stock market probably won't be your jam. But if you let things like that just, blow away, it's like you don't worry about it. It's like, okay, you've got the emotional intelligence to invest in the stock market.
Awesome. That's really that's really inspiring. What how has the company Ticker evolved? Because I'm hearing a lot about you. How do you structure this organization now? 4 or 5 years in.
Yeah. So to zoom out for a minute, when I built the service business, I had that agency back in the 2000s. There were so many lessons learned there. Like, I was bringing on legitimate employees, which high payroll, you got payroll taxes, you got to pay all that. And there were many months in a row where I wasn't paying myself. And this was through the recession. It was like, this was stupid and not a profitable business model. So coming to this model, I wanted to run it lean. So all my company, it's all contractors. I'm 100% owner. This is bootstrapped. I have not raised venture capital. For context there, with tech businesses, only 1% of tech companies actually are successfully raise venture capital. So it's very hard. So I see a lot of tech founders that don't have a lot of experience. They spend a lot of time trying to raise money. It's like, no, you don't want to do that. You want to go out, find customers and make money. So my business, it's structured as about 8 people. We've got about 3 or 4 software engineers out of India, and I've managed talent overseas for years. I've got a UI UX guy out of Poland. who's very talented. Then I have my media team because I got a podcast and a YouTube channel. I have a media team is spread out. I got a guy from Brazil, another one from Kenya, another guy from Bangladesh, and a latest guy just joined us. He's from Serbia. So I'm actually the only guy from the States who's in Ticker.
Yeah, wow, that's really cool. Yeah, we have some Serbian developers as well that go with us for a long time. It makes it a lot of fun conversations on the Slack channel with sports. So they have the best basketball player and tennis player alive.
Yeah. It's, well, the universal sport I find is soccer, or, as they correct me, it's football, Sean. It's football. It's, but, India, you have crickets, but it's fun to hear them talk about sports. I'm very open-minded. I love to hear it, but we could talk about sports all day, but we'll keep it on business.
Sounds good. So talk to me about your user acquisition strategy. Obviously, you got a podcast. There's getting, your name out there. You're appearing on podcasts. What is the user acquisition strategy for Ticker, and how successful have you been getting that target market?
Yeah, so I'll just, again, zoom out a little bit for the audience here. We're considered a B2C SaaS or subscription platform. There's really three different types of SaaS models. You got B2C, you got B2B, SMB, that's small and mid-sized business, and then you've got enterprise. And price points on B2C. With B2C, you want to, there's a rule out there with business, you want to charge what you're worth, but with B2C, it's not that. You want to charge what people are willing to pay and not churn out of. For example, Netflix is about $15 a month. HBO is about $15 a month. One of our competitors is Simply Wall Street. It's about $15 a month. So we pushed against that for years, but when we went to $15 a month or $99 a year, our churn significantly reduces. So it's like, okay, so you got to charge what people are willing to pay. We'll get to your answer here in a second. B2B, SMB, you can charge prices that can be like, think MailChimp, you can charge like $30, $50 on up to about $1,000. You can go four figures, but in most cases, small and mid-sized businesses, they're not going to pay more than four figures for a software per month. And then enterprise, that's where you're playing with the big boys. That's, the GEs and I think of Google and Microsoft, the list goes on. So they'll pay millions of dollars per year for software. So our acquisition strategy has to be focused on the consumer. So we've got to go where people are looking. And YouTube is one of our key acquisition strategies. I've had to quote unquote teach myself to be a finfluencer. Yeah, well, that's the name and people make fun of it, but it's like there's a lot of people searching on YouTube with intent. They want to learn something in as little amount of time as possible, and there's a lot of investing videos out there. So YouTube is one, SEO is two, although SEO at a global level, it's not an overnight ROI. It took about 2 years for us to start ranking. So SEO is big, referrals from friends is big. There's a saying or a phrase in tech, especially low touch B2C, is you want product-led growth. You want it, so I share it with you, you share it with 3 other friends, they share it with 3, and it's this viral effect. So we're seeing some of that happen. And then the big thing we're working on are affiliate marketing strategies. We pay 50% commission reoccurring. We actually just upped it from 30 to 50 because we're playing with our affiliate strategy, but we're trying to create campaigns that motivate like YouTubers and bloggers and people talking about finance that already have a huge audience. They can partner with us to monetize. They can make ongoing revenue. So we're trying to get that machine rolling. So those are really the 4 user acquisition strategies we use today.
That's really cool. So you're front and center, and you do a great job of being the face of the organization, as also the only full-time employee.
Right.
How does that work within your team structure though? Because everybody works for you, and it did sound like you have, even their contractors, like everyone is still part of this team, part of this shared goal.
Yeah.
How do you bring on that camaraderie with a team full of contractors?
Good question. You go back 10 plus years and you wouldn't get that feel from contractors. Like they're like, I'm a contractor. This is what I do. I'm just here to solve a problem. But now it's whether you're employee or contractor, it doesn't matter really, because I'm seeing people really get invested in the brand and the problem we're solving. We're hyper focused on the customer. I won't go on details, but we had people in the company. I had a partner at one point, and they were toxic. There was not empathy about the customer and their problem, and getting to know the customer and talking to them and asking questions, getting in their shoes. They want to invest with confidence, and their pain is most people feel like they are behind. They're behind the 8 ball. They don't have enough in savings or investments. And the anxiety raises because they're thinking, okay, so how do I make more money with my company? How do I make more money with my job? Do I need to get a second job? All that's going through their head. And then we come in and say, pause, relax, and now let's make money work for you. Make your money work harder for you. And that's when they're like, oh, okay, that's great. And my IT members, they wouldn't think like that. They had to go. So now our current team, they're invested. They have that empathy, or at least enough of it to, make me satisfied with their work. But if I catch any hints of anybody that doesn't have empathy for the customer, they're gone. Like you got to have empathy for the customer.
Absolutely. And it sounds like with a lot of the content that you put out, so much thought leadership goes into this, right? You're trying to get between that 15 and 50% return, and you can humbly boast that you get there, regularly. And to the point where your customers decided, hey, like we want to know more about what you're doing. Describe that relationship where you have a lot of people who are using your product, listening to your podcast, and they feel like they really know you because you're sharing so much with them, when you only know how they're using your platform, right? Or perhaps you know more. What is that relationship like?
Yeah. So one thing that I learned through the years is email's great for getting feedback, but you really want to get on Zoom calls. You want to get feedback. You want to write. One question can lead into 3, can lead into 9, it can snowball to really understand. There's a book out there I highly recommend. You may have read it. It's called The Mom Test. And what it teaches you should write that down or make a note, but it teaches you to ask the right questions. For example, if I were to go to you and ask you the question, hey, what do you like and don't like about my software? That's nice. But I should be asking the question, what software do you currently use? Why do you use it? Why do you pay for it? So it keeps mine out of the equation. It just gets right to the root, which is how do we make a software make money? So it's asking those right questions. So I'll ask questions like that. What do you use today? Why are you using it? Why are you paying for it? And then kind of pepper in the questions. What do you like about Ticker? What don't you like? How can we solve this problem you're facing? And again, email, it's back and forth. It can take days, if not weeks, but on a Zoom call, you can press that time down to 30 minutes, maybe an hour. It makes a world of difference, and that's the way you got to do it. That's product ownership 101. If you want to do it right, you got to be on the call with customers.
Yeah, I think that customer intimacy is really builds loyalty as well. I had a trainer who would come to my house during COVID and stay 10 feet away and tell me what to do with all the weights. And he was telling me that he built his original website on Squarespace back in like 2012. And he would email questions about like, how do I do this? And like the founder and CEO would like be the one to reply. And he was able to kind of find an old email and then like reply to it to the guy like 10 years later after he really made it, and was like, wow, this is crazy that you started here and now you're where you are at Squarespace. And he got an email back that was like, hey, thanks so much. I remember those days. I appreciate you staying on the platform.
That's cool.
Right?
I love stories like that because there's so many businesses, and this is the issue I had with people on the team. They wanted to create insulation between themselves and the customer because they're better than the customer. That was the attitude. Like, they're smarter than the customer I need to talk to. It was like, no. We are solving problems. We have to take that barrier out of the equation to talk to these people. So when I hear stories like you said with Squarespace, And the still responding to customers with just like general questions. Like they could have the attitude like, oh, I'm too good for this, I'm above this. Or they could like, that's a teachable moment. They can learn, like, they can teach this person something. They could ask a question like, what do you like? What don't you like? Those, I try to do that. Like you'll laugh at this, but when people churn out, I will send individual emails to them and I'll say, first off, thank you for giving us a try. I really appreciate it. 2, what can we do better? Obviously, we're not doing something right and you're leaving. What can we do better? And I don't get responses 100% of the time, but let's say it's 50%. They'll come back and sometimes it's harsh. Like and that's the feedback you want. You want the harsh feedback because that's going to poke you in the chest. Be like, you got to make some changes. You got to make some improvements and don't wait forever to do it. You got to act now.
Nice. So from everything we're hearing, like it sounds like you have you're attacking life from a very advantageous place, right? You have teammates who are contractors, but no partners anymore. So you're calling all of those shots.
Yeah.
You're doing well in your investments. You've got a healthy customer base within the platform. So what does your week look like? Are you one of those people who's got to put in 60, 70 hours to maintain that able to build the life where you work a few hours and you get to live a few hours? How do you organize and balance personal and professional?
Yeah. To zoom out again a bit, Ticker's going to be 4 years old this coming July. I bootstrapped the company for 3 years and working just full time for a large corporation. And with that, I would usually work about 40, 45 hours a week and then work 15 hours on Ticker. Well, now that I'm full time, about a year now, just over a year, honestly, I work I'd say about 35 hours a week. I don't work Fridays. The weekends are off. My wife and I we're big on work-life balance, and now it's summer here in Wisconsin, so Fridays are for golf. I'm not going pro anytime soon, but I do enjoy playing the game, and I've got certain friends that are in sales or have ways they create flexibility. So that's that. And then like Saturday, Sunday, it's like there's something to do outside, whether it's like kayaking or checking out lakes or checking out restaurants, a new distillery or brewery, whatever. But anyway, my week is pretty structured. I would say, time management, efficiency, I've always been very good at. College provided me with that training. I was going to school full time and worked full time. So how do you balance that? So, my week is pretty structured. We could really get into the details, but it's, hit the gym, come home, read, and then hit my day. By about 4 p.m., I'm pretty much done and I can do whatever I want at night.
Nice. Yeah. We, in our household, we've got to, balance who gets to work out in the morning versus the afternoon. I got to do the afternoon workouts, right?
Because you got kids, right?
Yeah. But we're, it's a good balance. I now come to love doing it in the afternoon. Well, at least in the summer when the sun goes down later.
Mm-hmm.
So there's more opportunity to, run or swim outdoors. I mean, you can always hit the gym, even if it's dark when it's 5 o'clock.
Sure.
Some mornings though, when you're kind of groggy and the coffee's only doing so much, it just would have been really great to get an hour sweat in, and that'd have been
right. Yeah.
All right. Well, Sean, what else do the people need to know about Ticker? If I'm on the fence, I've heard you. Okay, you Warren Buffett, you're 15 to 50%. All right, I don't know. I'm using Robinhood. I follow the trend stocks on Twitter.
Sure.
What? Tell me, give me the big sell. Why do I need to come to Ticker?
Yeah, I love this question because I'm going to give you a contrarian answer nobody expects, which is I could talk about Ticker all day, but don't even listen to me. I could talk about stocks and Ticker all day. Go to Trustpilot, see what our customers have to say. We've got the highest score in the industry. We're a 4.9 out of 5. So that's number one. Number two is, again, our calculations are open source. You can see, behind the curtain how this whole thing works. And number 3 is when you join, I actually do show you what stocks. You get to see my portfolio. You get to see what stocks I hold, percentage of allocation. So you got a good starting point. And nobody else, tell you right now, nobody out there that has my kind of platform are showing you what they invest in if they're the CEO, or giving you the calculations on top of it. So that's my sell. And the final thing I'll say there is, and you'll appreciate this, investing is like, the hardest part is making that first transaction. It's like, I always say, it's like jumping in a swimming pool when you're like 5 or 6 years old. Like, I remember that moment. It was terrifying. Once you do it once, like, hey, this is not too bad. I got this, So if you're a complete beginner and you're apprehensive, I tell you what, Ticker can help you get from A to Z pretty quickly with a lot of confidence.
No, that's great. And you definitely seem like the type of CEO, once you make it really, really big and your early customers email you and go, wow, remember when way back when you were taking Zoom calls with me? You'll thank them first, because you really care about them and creating the right platform.
100%. I've made a lot of friends all over the world with this cool. This is a dream come true. I tell you what, it took a long time to get here, but this is awesome. I love it.
All right. And where can our audience find you?
I try to keep it simple. 2 locations. You can go to ticker.com, just TYKR.com. And then the other location would be LinkedIn. I'm very active on LinkedIn.
All right. Great. Well, thank you so much, Sean. I really appreciate you coming on today. This was great.
Thanks, Austin.